Welcome back, Red Door family. Here we are. I'm joined here with Mike Taylor, broker owner of Red Door Property Management. Mike, how's it going?
Excellent. How are you doing, Chris?
I'm doing well. You all know me. I'm Chris Knight here, business development manager with Red Door Property Management. We are about to jump into March 2024 market reports. And we've got a little surprise here this month. If you've caught any of our previous market reports, we've mentioned trying to expand some of the data searches, some of the cities that we're incorporating into the market reports that we run every month. So we're going to start to do that. Some of the data is going to be a little bit limited here as we try to get that kicked off, but that's okay. We're still going to get this started so that as the months continue to roll on and the Indianapolis overall market continues to expand. I mean, there's a tremendous amount of development that's going on in these communities that surround Indianapolis. And we want to make sure that our viewers are tuned into that because there's a lot of opportunity there investment-wise that you can jump into. I mean, I'll quickly even speak to McCordsville, which is a huge market that I love to talk about. And Mike, I don't even think I mentioned this to you yet, but I was just reading in the paper, right? I was reading a paper. But the point is that Hancock County was the fastest growing county in the state of Indiana with a growth rate of 3.7%, beat out every other county in the state of Indiana by over a full percentage point.
Wow.
I thought that was pretty interesting. Yeah, right? So Hancock County is continuing to expand. It's definitely a market I'd be looking at if I had fresh investment dollars and was looking for a market to jump into. So we're going to continue to bring you that information. And I mean, that's huge. That's information you really want to be dialed into if you have investment dollars and you want to get in the real estate market with, which if you consider yourself an investor at all, you better be looking at real estate. So without further ado, let's jump in. We're going to start with the Indianapolis market, pull up our graphic, and let's get rocking and rolling. Mike, what do you think about Indianapolis?
Let's kick it off. Yeah, we might, because we're going to add, so we've added so many, we usually do 5 submarkets. We've added 5 additional submarkets. So we might try to move through each of these just a little bit quicker because we've got more areas to cover. But I think that might be a better overall product covering more areas. So anyway, let's kick off Indianapolis. So this is March. We're kind of starting to get into the leasing season, not quite there yet. Just the very, very beginning of it. And honestly, Indianapolis, not a ton to report here. So active homes is 1977. That's actually a little bit down from last month in terms of number of homes on the market. So that is good. You know, less inventory going into a busy season is good. So that's good news to report. Really nothing to report on average rent. Pretty much stayed the same. Not pretty much, stayed the exact same since last month. So nothing to report there. Down just a teeny bit year over year, but as you can see, you know, in the middle here, a little sneak peek into April, it is inching up as we would expect as we get into the leasing season more and more. So the question is this going to look like more of a normal year after we kind of had a wild ride last year in terms of price, days on the market? It was just a little unpredictable last year. So it's the beginning of the year is shaping up like a more normal year, but we'll have to see. So in theory, we should kind of like see the average rents ramp up, peak in somewhere probably July or August, and then kind of trail off as we go back towards winter. So that's what's happening so far. Let's see if that trend continues. Average days on the market, 63 days on the market, which is, I mean, it's not great. You know, if you've been following this, it's been a wild ride. We'll see on the next slide here in a second what a wild ride it was last year. Coming out of the winter, that's not crazy based on the historical data, but it's not awesome. So 63 is, you know, okay. You know, we like to keep it lower than that, but we'll keep an eye on that. Hopefully, that should go down as the spring season kicks in.
Yeah. And real quick, just while you're on the average days of market, I will note that 63 days on the market is not what you want, right? Not if you're an investor. 60 days on the market is the absolute tops I would want on my property if I'm in a rough season, right? During the winter months or something like that. That's the top of what I would see, which, by the way, Red Door is far exceeding that. We were just looking at the fourth quarter numbers of last year. Our average days on market were much closer to the 30-day mark. Which is about what you would expect. And we even had some rough patches last year. But That just speaks to how important it is to stay in tune with this data. But anyway, where I was going with this is average days on the market. If you look at that top digit, we're down 32% from last year.
Yeah.
That's something to speak of.
It is something, and it'll make more sense, I think, when we look at the historical days on the market. But it was a wild ride last year. But so for me, Indianapolis, kind of the big news here, if you want to call it that, is the average sales price looks like it's increasing, right? So we've got almost a 12% increase year over year and a 5% month over month increase from February of 24. So that's pretty big. I mean, honestly, Indy is not necessarily known for an appreciation play. Typically, those are some of the other counties and other cities that we manage homes in. So this is pretty big for Indianapolis. That's a big jump month over month in Europe.
Yeah, absolutely. So I'm going to mention this, I'm sure, on some of the market reports, because I would imagine we're going to see similar data, right? I mean, it's no secret to anybody. If you've owned real estate here over the last 12, 24 months, you've seen a pretty good appreciation play. If you just bought a property last year and you did nothing else with it, the same thing you would do with a savings account, right? You did nothing else with it. You maintain it. You didn't want it to deteriorate, whatever. You saw almost 12% on your money. Now, if you rented it out and you were lucky enough to see some cash flow, my goodness, real estate is the perfect investment vehicle, right? I mean, just an appreciation, you're seeing 12%. You're not going to find that in a savings account. You're not going to find that in a CD. You're not going to find that in money market. Real estate is where you need to be. All you need to do to be successful in real estate is making sure that you have the right partners that are going to see that you're successful in that business. So yeah, I thought that was amazing. Average sales price. Again, I'm sure I'll mention this. I get excited about that. Who doesn't as an investor at 12%?
For sure. Yeah, that's a great return. Like, as you mentioned, you get cash flow, you get also appreciation, which we're talking about. You got depreciation, which you can take off on your taxes. So I mean, it's just so many ways to win when you invest in real estate.
Yeah, exactly. Yeah. So if you're ready, I'm going to go on here.
Yeah, let's go to the next slide. Just for some kind of historical perspective for Indianapolis. On the left here is active homes on the market. The red line is this year. The blue line is last year. We're following kind of the same trend last year, which is interesting, where we're seeing a decline in inventory as we go into the busier season. Now, I do expect that probably to follow the same trend as last year, where we're going to see more homes hit the market as the leasing season continues. It's just pretty much, I would say, almost but guaranteed. That will not shock me at all if we start to see this is probably bottoming out here in terms of number of homes on the market. We should start to see that increase, but we're also going to see the number of homes leasing up increase as well as the year goes on. Days on the market on the right-hand side, the blue one, again, is last year. Wild ride. Makes almost no sense. It peaks in June. July, which is the height of the leasing season, which is the exact opposite of what you would expect. So who knows what we're going to see here, but it is pretty significantly lower year over year, which is encouraging. Last year we were at 94. This year we're at 63. So 63, as you mentioned, is not anywhere where you want to be as an investor, but it is encouraging to see that down that much, and hopefully that trend continues to go down again as the leasing season picks up and we get into the busy season here.
Yeah, exactly. And as we all know, last year was a little bit of a wild ride as all of these markets were beginning to stabilize a little bit. So I'm very excited to keep this going and see where we land in comparison to what I would consider a wild ride, and should we expect this year to correlate with last year's numbers? I wouldn't think so, but I mean, only time will tell.
Yep.
All right, let's move it on here. Fishers. We all know much. Well, I guess right now we all know how much I'm kind of back and forth on Fishers.
Hey, Chris, sorry, I got a bus coming up here. Let's press pause real quick.
Yep, good.
Sorry.
All right, that wraps up Indianapolis. Let's jump into the Fishers market here now. Now, if you've been in tune at all to our market report videos, which I know every single one of you have, because these are content and you can't miss it, you know that I'm super excited about Fishers. I'm down about Fishers. I'm really excited about Fishers, and I'm really down about.
You're Fishers. A fair weather fan for Fishers.
I'm a fair weather fan, exactly. I look, Fishers is a great market to be in. Is it the first market I'm going to look at anymore? No, probably not. But Here's what the data tells us. Active homes in the market right now, we've got 105 active homes with an average rent right now at $21.50. It's up 2.38%. Now here's the kicker. Average days on market, 78. That puts us up 50% from the prior month. The month that I got excited again. I'm gonna now. It's like the stock market. You don't know what's going to happen. Is it going to go up? Is it going to go down? Some of these other markets, I feel a little bit more are predictable. Fishers is becoming one of those markets. It's becoming a little bit harder to predict. Now, one thing's for sure, I do believe it's a strong appreciation play. If we're looking at the average sales price for the investor point of view, you're up 6% month over month. The appreciation play is definitely here. But is it the first place I'm looking at to put my investment dollars? Probably not right now. And I do want to remind you, we've got several properties in the Fishers area. It's a great rental market, solid school systems. And that's going to be the theme of this market reports video as we get into other market areas too. It's going to be a very similar theme. Very good school systems that are going to drive these strong markets. But an average rent rate of $21.50. It's up 2% from the prior month. Anything else you want to speak about Fishers? I don't want to spend too much time on this one.
No, other than just to kind of echo what you were saying is that, if you were looking to place new dollars, this is probably not the best play unless you're looking for a super safe place. It's going to have appreciation. You're going to attract good renters. And so the risk is really, really low for purchasing an investment property here. This is a safe place to put your money. Are you going to cash flow if you're trying to buy a house today in Fishers? Probably not.
Yep.
If I owned a home, or if you bought a house, 3 or 5 years ago, you're probably loving it. Or if you're thinking about moving out of your house that you have and you've owned it for a couple of years, this is a great place to turn an existing home that you've owned for several years into a rental. But to purchase new, a little bit tough.
Yeah, that's exactly right. Yeah, if you were lucky enough to buy 5-6 years ago, you're pretty happy right about now, especially with all the upgrades they've made to the town center. But again, just to reiterate, probably not where I'm looking at placing my new investment dollars. Moving on, we'll get into some of our active homes in the market. Now, to me, and I don't know if you'll agree with this, Mike, it's based on what you were kind of indicating in the Indianapolis report. I tend to think that, and if we look at last year's trend rather, I tend to think that inventory typically would dip during April, May, and June. Now, I think that because it's always a hot market. Properties are flying off the market, so inventory remains fairly low. So I was kind of surprised by your take on that in the Indianapolis market, but I get it. More properties will hit the market. Same thing with the sales market. You're going to see more properties hit the market in spring because they want to take advantage of it. So I do see that side. Do you think there's any correlation to seeing less inventory on the market because they do fly off the market a little bit faster?
I see your point. I would say if we tracked something called absorption rate, that would probably, and that's how much inventory is on the market, as compared to demand. So I would think that would maybe trend lower in the June, July, and August, which would be to your point. But I think it's just sheer volume of number of homes hitting the market and the transactions are just so much more in the summer months. So I think to your point, you're probably speaking more of absorption rate versus just number of homes on the market.
You're absolutely right. Yep, you're absolutely right. Going over to the days on market, again, this is one of the biggest reasons I'm not completely sold on Fishers right now. Look at the last year's numbers where we were trying to find more of a stable market. We're at 78, where in March last year, we were at 42 average days on the market. So again, I'm not sure if it even bears repeating, but if you're looking at placing new investment dollars, I'm not sure if Fishers is where I'm looking. But overall, a great market. If you have a property there, if you already currently own a property and you're thinking about putting it on the market, absolutely. It's an amazing rental market, high quality tenants, low vacancy, very low turnover costs typically in the Fishers area. If you have a property and you're moving out of state, you want to maintain your low interest rate, absolutely put it on the rental market. But if you have new investment dollars, you might be looking at some of these areas we're about to get into.
Yep.
So unless you have anything else to say, I'm going to jump into my new favorite. Here we go. Noblesville. Our Noblesville market here we go. Active homes, we're at 100. This is staying pretty, it correlates with our other previous market reports. Active homes are kind of dialing down from where they were last month. Last month, we were seeing 121. This month, we're seeing 100. Average rents, $17.99, down $100. So you're down 5% month over month. Nothing that I would be at all concerned about at all. In fact, if we look over here at our median rental price over time, we're going to look at our sneak peek into April. We're going to see those numbers tick right back up. Not concerned about it at all. Average days on market, what we were seeing last month was 34. I absolutely expect that to currently be near our average right now. And in fact, I expect it to even improve over the next coming months as the market is absolutely heating up. And even if we see a downtick in the average monthly rent, that leads me to believe that we're probably going to see a downtick in our average days on market. I wish that we tracked our market-specific average days on market here at Red Door, but I would easily bet that we are considerably under the 30-day mark. Our average sales price, no surprise. I mean, we're up 2% month over month. It does surprise me a little bit that we're only up 5% year over year, but the tremendous amount of growth in the Noblesville area has really been happening over probably the last 12 months, more than prior to. Number of homes sold, 83 homes sold in the prior month, and that only continues to tick up as we were at 72 the prior month.
Yeah, we highlight Noblesville for a reason, right? It's a good, strong market. It's a good investor market. It has good fundamentals. So I think Noblesville is a great market to invest in for sure.
Yeah, absolutely. Low investment price point, although we're up almost $10,000 month over month, believe it or not. Man,
that's crazy.
That is crazy, right? Man, I'd be looking at Noblesville. I absolutely expect that to continue to go up. Put your investment dollars here in Noblesville. Okay. So looking at year over year numbers, Noblesville active homes in the market. This doesn't surprise me at all. We have a lot more active homes in the Noblesville market compared to last year, every single month over month. It's an expanding market still, a lot of new construction going on. This doesn't surprise me. We're at 96 again for the month of April, but we were at 100 for the month of March. Days on market, here we go. I mean, we're less days on market than we were last year. It's a much more stable line from January to February, and I expect that March line to continue pretty much along the same line. I'm really excited to see where that line leads us in April, but right now we're at a very healthy days on the market. This is what I like to see.
Yep. Good, strong fundamentals there. That days on the market looks really good. Let's hope that continues throughout the year because as we can see, Fishers is kind of weird and you're about to see Westfield even weirder on the next slide. So if Noblesville can remain stable, that would be really great.
All right, here we go. Rocking into Westfield.
All right, let's jump into the Westfield market report. So active homes is 100, and that is really following the trend of everything else we've been seeing as inventory is shrinking a little bit before the leasing season. Last month, we were at 121. This month, we're at 100. So that's good. Less inventory is good. Average rent, relatively unchanged here since last month, 23, call it $2,400. Unchanged since last year and really unchanged since last month. You can see the sneak peek into April. It looks like it's going to maybe follow that same trend line as last year, but we'll have to see. And then the big news here is this wild and wacky days in the market of 123. Like, I just don't even know what to make of that. Like, that doesn't even make sense. I mean, that is 4 months on the market. That is crazy. That I have no explanation for that. That does not make sense to me. I mean, last month was.
Sorry, Mike, to interrupt you there. It's too many self-managed properties. That's what it is. Or they're properly managed from other property management companies who don't stay in tune with the data. That's what it is, driving this number up. There it is. I said it.
It probably is. On Red Door managed properties is what it is. No, but I don't know. Honestly, it was kind of, I thought, artificially high last month at 84, and I kind of poo-pooed it and said, well, I'm not that concerned about it. And honestly, overall, I'm not, but my eyebrows are raised. It's like, what is going on here? That is concerning. I mean, look at that, up 136% and 46%. I mean, like, what is going on? So I honestly, I don't have a great explanation, Chris, for days on the market. It's just, I don't know if it's just wacky like Indianapolis was last year or what, but I don't have any good answers for you. Sorry.
Yeah, no, yeah, I wish I did too. Now, what I will say, it just kind of hit me here, so I'm going to kind of divvy off just a little bit. Now, if you have a property, you're in Westfield, you're not sure what to do with it, and it's becoming very difficult to do anything Airbnb related in Westfield. But
Yeah.
we all know that's where we're seeing a lot of success in the Westfield market as far as real estate investment goes. We've brought on a couple new Westfield properties that are soaring as far as overall ROIs. That's probably what I would be looking at first. Am I part of an HOA? Does the HOA have any rules against me? That's probably the area that I would be looking at first. I mean that, now that I say that, that rule probably applies in a lot of areas. I might be looking at that avenue first, depending on several factors. But anyway, Westfield just always piques my interest as far as the Airbnb real estate market goes. So I might be looking at that first if you can squeeze it by, depending on your HOA regulations.
Yeah. Yeah. That market is good. You got to be careful. It is getting saturated, to your point. So you just got to be careful. So I don't know. I mean, Westfield, of course, as you know, is one of my favorite markets. I got a bunch of houses up there personally. So I'm always, pro Westfield, but these numbers are making me question it. Maybe we should start putting it in the Fishers category, but I don't know. I'm not willing to give up on it quite yet. I'm holding on strong here for Westfield. So I'm going to give it another couple months and see how this plays out. So I'm not giving up on Westfield just yet. So
yeah, sounds good. We'll continue to keep our eyes on that average rent, see if it ticks down as those average days on market continue to tick up.
Yeah. Yes, for sure. So average sales price in Westfield, 364, really still, relatively affordable compared to nationwide. 74 of those homes sold last month. So lots of homes in that price point transacting. There's homes available in that price point. If you are interested in purchasing there, it's still an affordable price point. And it kind of falls in that Fishers, like it's a super safe market. I mean, you're only going to see appreciation. You're going to get typically high quality renters. So again, the risk tolerance here is really, really low for an investment property.
Yeah, agreed.
So let's take a look at the and this is what doesn't make sense to me. So active homes, again, trending downward, starting at 129 in January and 100 in March, and you can see the sneak peek in April is 74. So I have to believe that days on the market is going to come down. I don't know what's going on there, but I mean, lack of inventory should drive down days on the market. So I don't know what's going on with that days on the market over there. Again, it's just it's dumbfounding to me what's happening. So I mean, look at that, 74 days on the market, just over what we had last year. Which, if you look at January, look at the gap there. I mean, it's more than double, and that gap has closed. So we're basically equivalent in terms of number of homes on the market this year versus last year. But for some reason, that days on the market, I don't know, it just doesn't correlate. So I'm almost positive that's gonna go down.
Yeah, I would highly suspect too. Golly, I don't even like looking at that graph there on the right side.
I know. Let's move on.
Yeah, you can't even ski down that slope. That's immediate death.
Next slide.
Next slide. Go. Okay, Greenwood. I'm going to take over Greenwood here because I really like Greenwood. I've in our private chats, and we've done market reports in Greenwood before. It's just not now. We're starting to make it part of our monthly cycle here, but. I like Greenwood. I compare it oftentimes to a little Noblesville. Actually, I mean, as far as active homes in the market, it's exactly what Noblesville is. Another area for low investment. So I'm going to jump all the way over. You know how I like to jump around. Average sales price for the investor point of view. So any homes that would have sold for under 500,000, which is the investor point of view, as we call it, you're averaging out at 323,608. That's a great entry point. Your average rents. The only thing that kind of confused me here is it seems to be down from March 23. Now, granted, some of our data here, because we haven't tracked it every month, is a little bit skewed. So it should become more and more accurate as we continue to mark these areas month over month. But we're looking at an average rent right now of $1,600. That's definitely a good entry point. Again, Greenwood's going to have some of those very similar aspects, good school systems, lower turnover costs typically. And actually, and I'm not going to go off into a tangent here, but Greenwood seems to be a pretty good Airbnb market, to be honest with you. But we're going to go down to the average days on market, which if we're seeing, and I'm going to continue to reiterate this, if we're seeing an average days on market in our market report indicating 42, that would just mean that Red Door is beating it by that much more. I mean, if our average at the end of Q4 was closer to the 30, 35-day mark on average in the worst time of year, which sorely beat out anything we were reporting on the market reports, I can guarantee you that we are beating the average days on market here in Greenwood, which is a 42, which I'm not overly concerned about, even if it is 42, which I would expect that also to continue to have a downturn as we get into the hot months, right? We're just inching into the spring. In fact, March isn't even, that's literally at the very beginning of spring. So we haven't even chipped off the iceberg yet. So getting into spring and summer, those numbers will tick down. I'm certain of it.
Yeah, that days on the market is really encouraging. If you're at 42 in March, I mean, if it's normal, whatever that is anymore, I mean, you should be probably in the low 20s in, May, June, and July. And
right.
that's really encouraging. That's a good market.
Yeah, if I'm anywhere near 30, I'll be jumping for joy during every one of these market reports.
Yep.
All right, let's move it on here. Greenwood active homes in the market. No surprise here. Correlates with every single other market report we've done. We're ticking down, and the sneak peek into April is going to continue to tick down as far as currently active homes. We'll see if Mike's right and if that continues to tick up as we get into the summer months. Days on the market. 42. Now, that's considerably lower than our all over. It looks like we're in the mountains last year. Now, hopefully, we are more Indiana level, which is more of the plains. That's what I expect to see more as we are in a much more stable market than we were this time last year. So, not concerned with last year's data at all.
Yeah, the fundamentals look really good for Greenwood, especially going into May, June, and July. I mean, this looks like a really good market this year for sure.
Yeah, I talked to a lot of investors, a lot of new investors, and there's already a lot of activity in this market, a lot of eyes on this area, which is no surprise to me. So I expect that to continue. If you got some new dollars in the market, keep Greenwood on your list.
Yep. All right, Anderson. So we got. You want to just go back and forth? We didn't really talk about who was going to take what here. I'll take Anderson, and you can take the next one.
Sounds good.
Okay, Anderson. So we've included 5. We really kicked it around pretty deep about what markets to include. So we're gonna keep it consistent with these additional 5 markets because we feel like they represent kind of some up and coming areas, right? That we think are potentials and have a lot of upward mobility in terms of rent price and sales price. So the next 5 are the ones that we've chosen to highlight that we think have a lot of opportunity over the next several years to invest your dollars. So Anderson is one of them. We have had that on here before. It is starting to become kind of an extension of Fishers, McCordsville, Greenfield. It's kind of pushing out that area, right? So that's I think what is driving the demand in Anderson, and it's affordability. I mean, you can see these numbers as compared to what we've been looking at. Average sales price of $350. Look at here, average sales price is $160. I mean, gosh,
Bingo.
Wow. Bingo. Where can you get a home in the U.S. for $160? And that's a decent home. It's
nothing since 2008. I can tell you that.
Exactly. So I mean, that's what's driving this, and that's why we think there's a lot of potential here because that's not going to stay at 160 for a long time. I mean, that's going to attract renters because the rent's at $850, and then that's going to attract investors because look at that 160. I can't even imagine buying a house for 160 anymore. So that to me is the big numbers to report here. And there's a lot of homes. There's 105 homes on the market. I mean, that's more than I think we have Brownsburg and Avon on here. I mean, those are a lot smaller markets. Anderson has 105 active homes, and then 73 of those homes sold at that 160. So it's not like there's just a couple of homes selling at that price point. There's a lot of homes transacting there. So this to me is affordability all day long. So I think that this is going to just continue to go up and up, both average rent and average sales price. So I think we're in the early days of the opportunities of Anderson.
Yeah, I couldn't agree more. Anderson's an expanding market. I'm not going to spend too much time on this. We've kind of reiterated this from previous market reports. We're going to continue to expand on some of these areas that we believe are going to expand and continue to have new construction, new commercial, new industry in these areas that are going to continue to push up your average sales price as well as your average rents. One thing I am a little bit surprised, though, from this market report is it seems to be down on your average rents month over month and year over year. That's a little bit surprising to me.
Yeah, me too.
Not concerning, but just kind of surprises me a little bit. I wouldn't be surprised to see rather is the average rents to tick over yet this year over the $1,000 price point per month. I mean, last month we were looking at an average rent of $921. I'd be shocked, and I'm going to continue to speak on this as the months go on as we get into summer. But I expect to see over $1,000 a month, honestly, as we get closer to summer, at least inching closer. And I'm looking over at the median rental price as I'm talking about this, and it looks like it got there. I mean, it did get there last summer, so
Got there just right below it, right? Yep.
Yeah, which it actually even speaks to my surprise just a little bit further. I mean, we're under last year's median rental price. What?
Yeah,
that's got to be okay. Saturation
could be.
That's what I would assume. There's a lot more investor activity, so that will probably level out. So anyway, that's our market report here for Anderson. I'm good to move on if you are. I do have to mention though, look at that median rental price. It looks like a shark or a dolphin facing to the left. See that little shark fin?
Yeah, I do.
Then you see the tail. Okay, all right, good. I just had to mention that. I wouldn't feel good about myself if I skipped it. Moving on. Okay. Avon, I'm going to take this one. Now, the next few slides are going to geographically stick to the west side of Indianapolis. Avon is a great market. In fact, if I were to compare it to another market, I would probably say a Fisher's market. This is kind of the numbers, honestly, when I would praise Fisher's. And maybe Fisher's is just, you know what? Maybe they're just becoming more of the Carmel, the hoity-toity Carmel people. That's where Fisher's is. That's what it is. That's how offended I am. Avon is kind of the numbers I would like to see in Fisher's. 44 active homes. It's not obviously the size of the Fisher's market, but absolutely driven by an amazing school system. Everyone knows everything about the Avon school system. It's well known. Your turnover costs, your quality of tenant, your vacancy rate in this area is going to be lower compared to a lot of areas. So let's just kind of tick through the numbers. Again, this is going to be an area that we're going to continue to mark month over month. Active homes, 44. Average rents were up a percentage point, a little over a percentage point, 19.15 as an average rent in the Avon area. That doesn't surprise me. With a lot of our inventory, we're definitely near that $2,000 price point. Average days on market, we're at 46 average days on market. Again, if you're working with Red Door or a comparable property management company, you're beating that average days on market. But 46 is not anything I'm like Redline concerned about. I'm going to jump back over to the left there. Median rental price over time still seems to be under where it was last year. And I'm continuing to think more and more about this. Rental rates were kind of out of control last year, and you forget, right? Because we do these market reports every month, so you forget the trend that it was maybe the 6 months prior. But I guess that does make sense, right? They were out of control. They corrected a bit. Now we're probably in a much more stable area at 1915. So now that I think that through, that's really what we're seeing there. Average sales price, your investor point of view. Let's talk about 8% on your money. If you got in a year ago, and a little over 3% if you got in a month ago. That play alone is amazing, let alone just a safe real estate investment area. Your rents, you put your property on the market for rent, you're in a safe market. What do you think?
Yeah,
Mike?
100%.
Anything to add?
Like you said, it's kind of a Fisher's play. It's a safe play. It is the risk again is very, very minor. You're going to see higher quality tenants because it's got the good school system driving in the high quality families with good incomes, good jobs, all that kind of stuff. So yes, 8% on a very low risk investment.
Absolutely. Move on to Brownsburg. I'll let you take over.
All right, Brownsburg, probably pretty similar to Avon, maybe kind of like Avon's little brother or something like that, you know?
Exactly what it is.
So a little, yeah, yeah. A little smaller, 24 homes on the market. But what's curious is, gosh, look at the average rent. It's above above Avon, which
Yeah.
is interesting to me. I kind of honestly would have expected it to be even a little bit less. And the average sales price is almost the same. So Avon is 340, Brownsburg is 339. So that's pretty curious to me. I was not expecting that looking at these numbers. So that's curious and super encouraging out of Brownsburg. And
Yeah.
if you look at the median rental price, it's year over year. It's been consistently over last year, January, February, and March, and the sneak peek continuing into April. So Brownsburg is looking like a pretty good market. Now, we don't have average days on the market because it is a smaller submarket, and so there's not as many homes reported as being leased. And so we like to have at least a decent data set to be able to report days on the market. So we're getting some good data. So we don't report, or we don't have days on the market. So I can't tell you what that is, but I can tell you the fundamentals of this market look pretty good.
Yeah, it doesn't surprise me that in this market we're seeing the median rental price over last year, and I would attribute that probably because the new construction that's happened over the last 12 months in this market. So you're getting there's a lot more active homes. I'd be certain than there was a year ago. So
yeah,
and Brownsburg, like you said, it's the little brother of Avon. Great school system still. And what I think Brownsburg has of it, and this could be my own feelings towards it, just living here in the Indianapolis area. But Brownsburg has that outdoorsy vibe to it. So you get everything, all the quality, or what I would consider quality in my opinion anyway, whatever that's worth is relative, but the quality of Avon. And then you also have the outdoorsy Eagle Creek over there. So that leads me to believe that the average rents are probably going to be maintained a little bit higher than even the Avon area. So at least that's what I'm going to attribute it to. And then it's hard for me not to mention when I see numbers like this. I mean, your average sales price, your investor point of view at 339, 131, up 12% year over year. Who cares about month over month for your sales price? It's up 12% year over year. That's incredible.
That's huge. And again, this is another stable, good market, good schools, good families, typically good renters. So again, pretty low risk. So I mean, gosh, that's amazing. 12% on that is great.
Exactly. Yeah. Let's move it on here. Well, let's not zoom in. Here we go. Plainfield. We're going to stick to the west side. Plainfield. I mean, if you had a brother, this would definitely be its sister, I think, to Avon. I mean, we've got a whole family of West Side living together. Plainfield's a great area. I'm not going to reiterate everything I've been saying. Look, it's the same kind of market. Good schools, low vacancy, good quality tenants, good quality applicants, rather. Active homes in the market. You've got 45 active homes, rather. The median rental price over time doesn't surprise me. I mean, it's continuing to tick up when we look into the sneak peek here in April. And I think probably to very similar reasons that I just spoke to in Brownsburg. There's a lot of new construction in this area, a lot more active homes in comparison to the previous year. And I think we're going to see that continue. The average rent at $16.99, which based on my own perception of Plainfield, I would have thought that would be a little bit higher. Well, I guess it will be. Look at the sneak peek into April. It will be a little bit higher. It'll be interesting to see if we get that dip that was indicative of May last year. I don't think that we will, but I mean, only time will tell. Average days on market, for the same reason that Mike mentioned in the Brownsburg, it's just such a small data set. We rather feel that it's not really accurate enough to report average days on market when it's such a small data set to really create your average days on market. So we're going to leave that NA for now. We'll continue to track that as time goes on. And I mean, we really want to report that. I'm not sure why, because Red Door beats them all anyway. But and then into your average sales price at 345. I mean, if you bought a house last month, you're looking pretty good because you're almost up 10% month over month. Right. Talk about a return. I mean, the only other return you're going to see like that's in Bitcoin, and
Bitcoin, exactly.
And that could change within 24 hours, right?
Exactly.
Down 2%, up 15%. So I like the Plainfield area. I love the West Side. As these market report videos go on, I think you're going to see my feelings shift a little bit from a Northeast Side lover to a West Side lover. We'll see. What do you think?
Yeah, I would say I was actually a little surprised to see the average sales price at 345. For some reason, I was expecting Plainfield to be a little bit more affordable for some reason. And I'd be curious to see if we broke it down, like how many homes are available under, I don't know if you can get anything under 150 now, but under 150, under 200, under 250, and compare that side by side with all these West Side ones. I feel like what Plainfield should maybe be a little bit more affordable, but that could just be bringing in my own bias in here. That's my perception anyway.
Yeah, that's a good point, because you're right. If I were speaking to my own bias, I would also feel like it'd be a little bit lower of an entry point in this area. But
yeah,
no, I mean, I like what I see here. We'll see if that average sales price continues to tick up at such a fast pace that it seems to be, at least month over month. Be interesting to keep track of these markets. Let us know, guys, if you really enjoy us including these other markets. Let us know if there's other markets around Indianapolis that you'd like to stay tuned into. I mean, we're happy to keep this growing. We've got a lot of feedback. People are loving it. I appreciate each and every one of you that continues to like and subscribe to these market reports. It makes us feel like it's worth putting these out. And of course, if you ever have any questions not related to market reports, but related to management or just overall landlording questions, let us know. We just put out our landlording series 101. A lot of standard questions that are going to be answered through that. I know a lot of you are going to love that information, but please don't ever hesitate to reach out if you have standard questions, or of course, if you're interested in a rental analysis, let us know. Happy to run one anytime for a property that we manage or one that we don't. Let us know. Mike, any finishing thoughts as we wrap this up?
Well, I think we have one more market report to go over.
Oh, are we still doing?
I think we have one more. Whitestown. The bonus.
Oh,
the
okay.
bonus
We're going to clip that. We're going to clip that and move that to the end.
I like it. All right. Whitestown. Whitestown. Finally, well, I guess this is still kind of the west side, the northwest side. This is north of Brownsburg. So yeah, we could consider this even the west side still. This to me is a truly up and coming, I mean, if not already up and coming or up and came market. It's really blowing up. It's outside of Zionsville and on its way to Lebanon. It's right there by the highway, so easy access for everything. So there's got a lot of good fundamentals on this market. So it's a little smaller, as you can see, only 35 active homes on the market, but the average rent, look at that, is $22.24. So it is a little bit of a higher end play out there because there's so much new construction. The homes are pretty big out there, I would say. With that newer construction. I think we just brought on one. It was a big house, like 3,000 square feet, something like that. So houses can be big out there. But this, I think, is an up and coming area, especially with, I mentioned Lebanon before. That is also an up and coming area, which we may include as time goes by on this. But this is definitely a market to watch. So average rent $22.24. And again, no days on the market just because the data set is so small. But average sales price, again, right at that 350 mark. So 354, 492. Not as much appreciation as I would have thought, to be honest. I thought we would have seen a little bit more with all of that new construction out there, but we'll definitely keep an eye on that. There's 54 of those homes that sold there at that average of 354. So this is a good market. It's a little more affordable than Zionsville. Again, it's got easy access to the highways. There's so much construction out there. I don't know. You've been out there lately, Chris? There's so much. Everything is brand new out there. It's amazing.
I have. And so as far as the average sales price at 354, you spoke to, you would have expected a little bit larger appreciation play. I kind of see why there's not. I mean, it's been so small, Whitestown, right? We're just expanding into that area. So it hasn't been an area of desire yet. And it's just flourishing, right? I mean, that's kind of why we're talking about more and more of these markets, because that's exactly what they are. So although my perception and your perception of Whitestown, we would expect to see more of an appreciation because we know what Whitestown is. But as people are just coming to the area, Whitestown is just finding its way to really on the map. So
Yeah.
that would be what I would speak to why we're not seeing the appreciation play that we would expect. Now, I'm going to go back here to Plainfield for just a second, because if we look at the average sales price at $345 with your average rent at $1,699, and we go back to Whitestown at average at $354, but your average rents are at $2,200. Are you kidding me? What market am I looking at jumping into? It's for sure Whitestown. Now, Whitestown also, the median rental prices over time, the same thing has been true for every one of these markets. And I even more strongly believe that we're seeing a much higher median rental price, because 12 months ago, there just wasn't hardly anything in these areas as they continue to grow here over the last 12 months. So that's no surprise either. Whitestown, to me, in my own perception, I see it as a baby Carmel. I feel like that whole north side, Whitestown, Zionsville, Carmel, they all want to stay relatively close as far as the nature, the culture that's been absorbed there in the Carmel, Zionsville, Whitestown area. I think that's exactly what they're trying to develop there.
Yeah, for sure. There's so much commercial development that's gone out over there in the last year or two. It's in my mind, it's very similar to Westfield. In fact, in how fast it's been built up and is getting built up. To me, it's very reminiscent of Westfield. It's just kind of like boom, out of nowhere, all these houses, all this commercial. So there's a lot of activity going on out there for sure.
I totally see that. Yeah, I absolutely see that. Yeah.
So,
well, if you're good with Whitestown, I think that's it. As we incorporate these new areas, I just tried to wrap us up on the previous market report, but I'm going to go ahead and close this out here now. Let us know, guys, if you have another area you want us to include, what you think of these new market areas, where you might be putting your investment dollars. Let us know if you want us to run a rental analysis for you for a property that we manage now, or maybe one that we don't. Happy to run one and send it over to you at any time. If you have any general questions, please, I hope you don't hesitate to reach out by phone, email, however is convenient for you. Mike, any closing thoughts as we wrap this up?
The only thing I would say is, we mentioned this earlier in the market reports, but if you have a house that you bought 2 or 3 or 4 years ago and you've got a 2, 3, 4% interest rate, my goodness, to let that go is, if you can do anything, I would do anything to hold on to that. Turn that house into a rental. Don't sell it. You've got gold right now, because interest rates are higher for longer, right? I mean, we are here to stay in these 5, 6, I've even heard 7 and 8% interest rates. So that gives you such an advantage by having that low interest rate. If you have a house that you own that you're thinking about turning into a rental, just know that you've got a huge advantage with that low interest rate, 2, 3, 4%. So use that to your advantage.
Absolutely. I mean, everyone I talk to that's lucky enough to have an interest rate like that, just myself included, I'm pretty sure I'm stuck in this house forever, or rather, this house is stuck with me forever, at least.
Yeah.
If we ever move, there's no way I'm letting go of it. We will keep that interest rate. I'm not going to let go of that. So you're absolutely right. If you're lucky, if you're one of the lucky ones that have, and I speak to them every single day, that have it, you're in an amazing position, not only to for the entry point that you for sure were able to acquire that property. So your appreciation play over the near future is amazing, let alone the rate that you were able to secure for that loan. Your ability to cash flow is almost certainly there. Reach out. I'll send you a rental analysis. I'm certain you'll be shocked to see what it returns. So reach out anytime. Mike, if you're good, I'm good. We're going to close this out.
Take it a wrap. Grab it.
Like and subscribe. Let us know how we can help. We'll catch you in the next one.
See you guys.